Hi everyone, good day. This is Clifford. Me and my co-reporters, we will be discussing about chapter 6, which is real estate investment performance and ratios. So I will be the first reporter and I'll be discussing the first few topics on chapter 6. These are the table of contents. We have here net income return of investment, cash return on investment, total return on investment, net operating income, capitalization ratio, debt service coverage ratio, turnover ratio, gross rent multiplier, operating ratio, and break even ratio. So now let's differentiate the real estate investment performance versus real estate investment ratio. Real estate investment performance measures how well a real estate investment is doing overall, while real estate investment ratios, these are numerical tools or formulas used to analyze performance. So basically, the real estate investment performance, it shows if the property is profitable or growing in value. So, for instance, like tracking if your rental property's income increases each year or if the property value appreciates. On the other hand, the real estate investment ratios, it helps investors compare and evaluate different properties using numbers. So, for example, like the cap rate, ROI, cash and cash return, gross rent multiplier, and so on. So we'll be discussing that later on. So let's start with the net income return on investment or the net income ROI. So net income ROI shows how much profit you earn from your real estate investment compared to the total amount you invested. So it helps you see if the property is a good deal or not, and it tells you how much you earn for every peso you invested. So this is the formula of the net income ROI. So we have here the net income ROI equals the NOI or the net operating income over or divided by total investment cost, and then you multiply it by 100. So for example, like you bought a condo that is worth 2 million pesos and it earns you 200,000 pesos per year. That's after expenses. So now let's apply the formula. So we have the ROI equals 200,000 pesos, which is your annual earnings, divided by 2 million. And you multiply it by 100, and the answer is the 10%. So you are earning like 10% return on your investment each year. So this measures how the profit income you earn from your investment compared to what you paid for the property. So let's move on to cash return on investment. So cash ROI measures how much cash income you earn from the property compared to the actual cash you invested. So it focuses only on the money you personally paid, so not the total property cost like loans or financing. The formula for this is the cash ROI equals before tax cash flow divided by cash invested, and you multiply it by 100. So to use this formula, first is we need to find the before tax cash flow. So this is your net rental income after paying all expenses and loan payments, but before taxes. So you divided it by the total cash you personally invested, like the down payment, closing costs, and renovation. After that, you multiply by 100 to get the percentage. So we have here an example. So this is an example in a condo rental investment. So you bought a condo for 4 million pesos and you have a down payment, which is your cash. You have like 800,000 pesos. And for the loan is the 3,200,000 pesos. And the other costs like the taxes, furnishing, etc., uh, cost you like 200,000 pesos. So the total cash invested is 1 million pesos. So now we have here the annual income and expenses. So we need to get the before tax cash flow. So now we have the gross rent here that you are earning 30,000 pesos per month. So you have to multiply it for 12 months. So that gives you 360,000 pesos. And now we also have the operating expenses like the maintenance, condo dues, and others. So it costs you like 80,000 pesos. And for the annual loan payment, that costs you like 180,000 pesos. So to get the before tax cash flow, so we have here like the 360,000, which is the gross rent, minus the 80,000 pesos, minus the 180,000 pesos, and you have here the 100,000 pesos. Now we already have the before tax cash flow. So now let's proceed in applying the formula, which is the cash ROI equals the before tax cash flow, which is the 100,000, divided by 1 million. So the 1 million is the cash, that's what the cash invested. And you have to multiply it by 100, and then you get that 10%. So this is the result or the answer. So your cash ROI is 10%. So meaning you're earning 10 pesos for every 100 pesos you personally invested in the condo per year. So now, why it's important? It is important because it helps investors see through profitability. So the net income ROI shows if the property is worth its price, and cash ROI shows if your own money is being used wisely, and knowing both helps you make smarter investment decisions. So yes, this is that would be all, and other topics will be discussed with my co-reporters. So thank you, and you may have a nice day ahead.